Good morning and welcome to today's Crypto News Podcast. We've got a packed show for you today with some exciting developments in the world of blockchain gaming and a major partnership that could shake up the startup scene.
That's right. Let's dive right in. One of the biggest stories today is the news that Telegram game Zoo has started its airdrop claim period for its soon-to-launch Zoo token on the Open Network.
This is a big deal for fans of the game who have been eagerly waiting for the token launch. As of Tuesday, users can claim their earned Zoo tokens inside the Telegram mini app, and the best part is that claims are being handled off-chain during this period, so users won't have to pay any fees.
That's a big perk, especially for users who are new to the world of crypto. But it's worth noting that this fee-free period won't last forever. Once the claim period ends on February 25th at 9 a.m. Eastern, users will have to claim their tokens on-chain and pay a 0.1 T fee, which works out to about $0.35.
Still, that's a relatively low fee compared to some other blockchain platforms out there. And the fact that Zoo is offering this fee-free period is a great way to build excitement and reward its loyal user base.
Absolutely. And speaking of excitement, we've also got news about a major partnership that could shake up the startup scene. Myriad, the on-chain prediction market from Decrypt's parent company Dastan, is teaming up with Paris Blockchain Week for its Start in Block competition.
This is a huge deal, with hundreds of crypto startups battling it out for a share of over $10 million in funding. And as part of the event, Myriad will run a community contest on its decentralized prediction market, inviting participants to make predictions based around the Start in Block competition.
It's a great way to engage the community and add an extra layer of excitement to the competition. And with Myriad's expertise in prediction markets, it's going to be fascinating to see how participants respond to the challenge.
We'll be keeping a close eye on this competition and the Zoo token launch, and we'll have more analysis and insights throughout the show. But for now, let's take a closer look at what these developments mean for the broader crypto market.
Building on what we discussed in the previous segment about the recent surge in Bitcoin's price, it seems like some industry experts are predicting that this is just the beginning of a massive wave of institutional interest.
That's right. According to Samson Mao, CEO of Jan3, once Bitcoin reaches $100,000, we can expect to see real institutional adoption that could fundamentally transform how global capital markets work.
Now, Mao's reasoning behind this is that previous Bitcoin bull runs were usually muted because exchanges needed to onboard and were backlogged for months. But this time around, with more established infrastructure in place, institutions will be able to jump in more quickly.
Exactly, and this could have a ripple effect on the entire market, leading to increased mainstream acceptance and potentially even more widespread adoption of cryptocurrency.
Speaking of adoption, there's another development that caught our attention this week. Story Protocol has launched its IP-focused blockchain, which could have significant implications for the world of intellectual property.
That's right. By utilizing blockchain technology, Story Protocol aims to create a more secure and transparent way to manage intellectual property rights, which could be a game changer for creators and innovators.
This is especially interesting when you consider the recent trend of artists and musicians exploring the use of blockchain to manage their IP. It's clear that this technology has the potential to disrupt traditional industries and create new opportunities.
Absolutely. And it's not just Story Protocol that's making waves in the world of blockchain development. Ethereum developers have also released the Open Intents Framework, which aims to improve the usability and accessibility of Ethereum-based applications.
That's right. And in other news, Monad and Orderly have joined forces to create a more robust and scalable blockchain infrastructure. It's clear that the pace of innovation in this space is showing no signs of slowing down.
With all these developments happening simultaneously, it's an exciting time to be following the world of cryptocurrency and blockchain. And as we always say, it's essential to stay informed and up to date on the latest news and trends.
Well, we'll continue to bring you the latest updates and analysis as more news breaks. In the meantime, let's hear from you. What are your thoughts on the recent surge in Bitcoin's price and the launch of Story Protocol's IP-famous blockchain?
Share your thoughts with us on social media, and we'll be back with more news and discussion after this break.
Building on what we discussed earlier about the institutional adoption of blockchain, I think it's worth diving deeper into the actual process of onboarding the buy side to these new rails. We've talked about the potential for trillions of dollars worth of real-world assets to be tokenized, but what does that actually entail?
That's a great point. Peter Gaffney from Blue Water Financial Technologies recently spoke about the need for the right systems and processes to be in place for proper tokenization. He emphasized that the ultimate goals of tokenization include creating a full-fledged secondary trading market, which requires a level of infrastructure that we're still building out.
That makes sense. It's not just about slapping a token on an asset and calling it a day. There needs to be a robust framework in place for these assets to be traded and settled in a way that's secure, transparent, and compliant with regulations.
Exactly. And speaking of regulations, the crypto industry is currently pushing back against the IRS's proposed DeFi broker rule. The Blockchain Association has rallied 75 crypto signatories to a letter calling on Congress to scrap the rule, which they argue is overly broad and would stifle innovation.
That's a big test of the crypto sector's influence over Congress, especially given the new, more friendly attitude towards the industry. It'll be interesting to see how this plays out, especially since the IRS has been taking a closer look at DeFi and its implications for tax policy.
Yeah, and it's not just about the tax implications. The DeFi broker rule has broader implications for how we think about decentralized finance and its relationship to traditional financial systems. If the rule is implemented as written, it could potentially drive DeFi activity offshore, which would be a missed opportunity for the U.S. to take a leadership role in this space.
That's a great point. And it's worth noting that this is all happening against the backdrop of a global conversation about the future of finance and the role that blockchain and DeFi will play in it. As we continue to explore the possibilities of tokenization and decentralized finance, it's clear that there are still many regulatory and infrastructure hurdles to overcome.
Absolutely. But despite those challenges, it's clear that the momentum is building. We're seeing more and more institutional players take an interest in blockchain and DeFi, and that's likely to continue as the infrastructure and regulatory frameworks mature.
Building on what we discussed earlier about the current state of the crypto market, it seems like Bitcoin is still struggling to gain momentum. According to a recent report from CryptoQuant, the demand and network activity for Bitcoin have been faltering, which could lead to a drop in price.
That's right. The report suggests that Bitcoin could drop as low as $86,000, which is a significant decline from its current price of around $96,000. This is likely due to the fact that Bitcoin has been trading in a narrow range, and several metrics are signaling a risk of a deeper pullback.
It's interesting to note that this comes at a time when Bitcoin is entering the final stretch of its weekly cycle. Some traders are predicting that it could bottom soon, but it's clear that there's still a lot of uncertainty in the market.
Yes, and it's not just the technical analysis that's causing concern. The fundamental analysis is also showing some signs of weakness. For example, the network activity for Bitcoin has been declining, which could indicate a lack of interest from investors.
However, it's worth noting that not all investors are losing interest in Bitcoin. According to a recent report, traditional finance investors, or TradFi investors, have been piling into Bitcoin ETFs. In fact, they invested $38.7 billion in the fourth quarter, which is 3 times more than the previous quarter.
That's a staggering amount of money, and it shows that institutional investors are still bullish on Bitcoin despite the current market conditions. This could be a positive sign for the long-term prospects of Bitcoin, even if the short-term outlook is uncertain.
It's also worth noting that this influx of institutional money could help to stabilize the market and potentially drive up the price of Bitcoin. However, it's clear that the crypto market is still highly volatile and anything can happen.
Exactly. And it's not just the price of Bitcoin that's at stake. The entire crypto market is closely tied to the performance of Bitcoin. So any significant movements in its price could have a ripple effect throughout the market.
Well, we'll continue to monitor the situation and provide updates as more information becomes available. In the meantime, it's clear that the crypto market is still in a state of flux, and investors should be cautious and do their own research before making any investment decisions.
Absolutely. And we'll be back with more news and analysis after this break.
We've had quite a day in the crypto world, from Mark Cuban shelving his meme coin plans to the market rebounding and stocks hitting all-time highs. Let's break down the key takeaways and what this means for investors.
Yeah, Mark Cuban's decision to put his meme coin plans on hold is interesting, He tweeted about potentially launching a meme coin with a twist where all revenue from sales would go to the US Treasury, but it seems he's now saying a lot has to change before he'd consider moving forward.
It's likely that Cuban is taking a step back due to the increasing regulatory scrutiny around meme coins. We've seen the SEC crack down on several projects in recent months, and it's clear that the regulatory environment is shifting.
That's right. And speaking of shifting markets, the crypto space saw a significant rebound today. Bitcoin is up over 2% and Ethereum is up over 3%. It's worth noting that this rebound is happening as stocks hit all-time highs, which could indicate a larger trend of investors seeking riskier assets.
Exactly. And we're also seeing some interesting developments from big tech players. Google is reportedly exploring the use of Bitcoin, which could be a huge catalyst for adoption.
Absolutely. If Google were to integrate Bitcoin into its services, it could open up a whole new world of possibilities for crypto. And with the market rebounding, it's clear that investors are feeling more optimistic about the space.
So what are the key takeaways from today's news? It seems that regulatory uncertainty is still a major factor in the crypto space, but at the same time, we're seeing increasing adoption and interest from big players.
That's right. And for investors, it's essential to stay informed and adapt to these changing market conditions. It's also worth keeping an eye on the bigger picture, including the global economic trends and how they might impact the crypto market.
Looking ahead, we can expect more volatility in the crypto space as regulatory frameworks continue to evolve. However, with the likes of Google exploring Bitcoin, it's clear that the long-term potential for crypto remains strong.
Agreed. As we wrap up today's show, it's essential for investors to stay focused on the fundamentals and keep a close eye on market trends. We'll continue to bring you the latest news and analysis to help you navigate the ever-changing world of crypto.
Thanks for tuning in, and we'll catch you all tomorrow.